Hey guys, so this is February 6th. In 45 minutes we have oil news. This morning I would like to devote to decision point 2 on Fibonacci Retracement tool. This is proprietary Fibonacci Retracement tool I developed in 2008 when I witnessed market crashing and spectacular stocks falling completely because this level was out. The area between decision point 2 and reversal zone is crucial. This is trend exhaustion levels. This is a chart present in the trading room since last week. Take a look. The end of the minor trend bright pink line since Thursday. On day trading chart took price 4 days to break through. The end of the minor trend key resistance became key support. Finally, price skyrocketed as you witnessed yesterday morning. If you missed the events of Tuesday morning, pretty please view video. It was stunning and flawless. Not this morning. If this support respected, market in brutal chop. Market is frozen. Key resistance becomes key support. Cannot short near. And again, if I convert this chart to 5, exact same formula remains. If I convert this chart to 15, exact same formula remains. This is a market yesterday after the trading room close. Do not short into this support. In Mastery course you learn these long-term trend levels. Crucial. And if I convert this chart to 1, exact same formula remains. Cannot short into this support. Only bullish trades are present. Bullish trend exhaustion levels and buyers stepped in again and again and again. So, this is the events in the trading room on February 6th. Exhaustion of bullish trend. Buyers remain in charge. Key support respected no matter what chart you trade. Present in front of you since last week. Market in massive chop. Waiting for oil news. If I take a look on S&P long-term charts, this is the events of 2016. Famous 1800 number, respected since 2014. Charts are twins with what you see in the trading room this morning on day trading charts. This is monthly, this is long-term investment decisions. Price and pain for 2 years. If you invest via S&P index fund, you understand how crucial support is. 2 years later, S&P reaches reversal zone at 2800 number. No surprise. This is what happens 2 years later. Boom. Not the place to buy. Clear on that? And this is where S&P now. More than a year later, since price reached reversal zone. This is S&P now. Chart present in the trading room for years. Where did the buyers come from? Exact same Fibonacci support. Decision point 2. 2300 number. What do you see? It's exact same strategy. Long-term Fibonacci levels that applied to monthly, to weekly and to hourly chart. Identical formula, identical strategy. Except hourly chart you convert to any day trading chart you choose to trade. And if I take it step by step on S&P weekly, let me show you what played out before price reached this level. As you saw extremely clearly on any day trading chart, took S&P days to break through this level. Correct? Days, 4 days, on any day trading chart, until price reached this level. Correct? And here's S&P 2016. Exact same. Dense. Crawl zone. 2300 next. Problem is 2200 brick wall. Trump's election time is flawless. Stunning opportunity to buy the markets. As knowledgeable trader would know. Price reaches decision point 2 a year later. And this is exact same decision point 2, 2300 number that price reached at the start of 2017 on weekly, where a buyer stepped in from after sell-off of 2018. What a stunning Fibonacci puzzle market is. Key resistance became key support. Do not short. And that's a dance on S&P right now. Except day trading chart. Price reminding you, shorts are not an option as long as this support respected. Just like on monthly, just like on weekly. And if I take a look on oil before oil news, exact same formula remains. This is oil in 2018, the start of the year. Taking a major pause, just like S&P doing in front of you right now, in brutal chops. What do you see on oil very, very clearly? Fibonacci reversal zone is next. And this is what oil starts doing next. 77, not far off, oil starts selling off. Decision point 2 becomes key support. Knowledgeable trader knows this support is out, oil will go into free fall until 55. Did oil break through the support? Of course. Took a while. What do I say? Months before. 64 is out, 55 is next. And that's what oil had done. Correct? This is oil now, before the news. This is oil now, Oil took more than 6 months to break through this key support. And as expected, 64 is out, oil went into free fall. What is the problem on oil right now before the news? Key Fibonacci resistance, the end of the minor trend. As you saw 2200 on S&P weekly, it is 54 on oil. Took oil a year to break through. 2016, 2017. And here we are, 2019. Not the place to buy into. So, 54 on oil, 2200 on S&P is what 2700 was on day trading chart S&P for days. And if I take a look right now on oil day trading chart present in front of you for weeks, you will not be surprised. Bearish news doesn't mean a thing. When oil at trend inception, oil would rally. Bullish news doesn't mean a thing if oil at trend reversal, oil collapsing. Especially when it correlates with institutional resistance. We don't care how bullish the news is. Bullish news doesn't mean a thing. Fibonacci reversal zone mean everything. This is not the place to buy. Agree? So, last few weeks, price reminded you. Fibonacci is the only natural predictive tool. This is a chart we used every single time before the news. What do we know? What is the key? If oil collapsing to here, it's a beautiful place to be. Monitor for long. Agree? Doesn't matter how bearish the news is. This is day trading trend inception. If oil is here, do not buy into resistance. Agree? So, if oil is stuck between these two levels, it's not a pretty dance. Why? It means both trends are equal. So, we need for oil to crash lower. And if oil is here, it's a beautiful thing. Rules are met. Take a trade of bullish trend inception. Never ever ever short near. At the time of the news, I will convert this chart to 1 minute so you can see the power of Fibonacci Retracement tool that you can install on any platform, any instrument you choose to trade. That will give you drastically higher accuracy than trading on the news ever will. As Fibonacci what forms the markets. Fibonacci not an indicator. Rules are met, take a trade, no matter what you trade. So, S&P remains in pain. Buyers exhausted, key support respected is a problem. We need for market to crash through this support, and when that will play out, it's a beautiful, beautiful thing. Do not short. If this support respected, if this support is out, it's a fantastic news. Market will start crashing, and that's what we want. Not short into support. So, let's pay attention to S&P. 30 more minutes before the news. So here we go. Finally, S&P is crashing. This is key moment on the short. Everyone clear on this? This is what knowledgeable trader monitors for. This is absolutely crucial moment, this support. And if S&P crashing through this support, S&P is doing exact same thing as oil had done on weekly. This is key moment that will determine market for the rest of the day. Agree? So, when day trading support is so close to day trading key support, this support is out. It's a beautiful, beautiful news. Everyone with me? So here we go, traders. This is the most important moment of the day, this support. So again, you're witnessing exact same support on oil being broken. So 20 minutes before oil news. Oil selling off, S&P selling off is a beautiful thing. Lower oil and S&P will crash. Better market will become drastically low. So, key support in front of you on S&P. So here we go, traders. Decision point 2 is crucial on this trade. Adjust your trail. Key moment on S&P. Exact same level you saw. Key support on long-term charts. In front of you now. In the course you learned this is your key target. If you're trading large size position, more than 3 lots, you leave 20% on. This is your key target when you're moving your stop outside of break even. Scaling out with the rest of the position. Agree? So here we go, oil news plus 1.5 ME. Anything above this number is negative news. Oversupply, undersupply, negative number is bullish news. 10 more minutes. So, knowledgeable trader just trail even closer. Agree? And that remains the key. So, here's Fibonacci reversal zone. This is where a trader expecting powerful bounce. Correct? And if you see powerful bounce from here, you will not be surprised. Because this is Fibonacci reversal zone. So here's oil in 2016 at trend inception. Do you remember that? Oil at 32. And this is S&P in front of you right now at trend inception on 1 minute chart. Identical Fibonacci level. So again, absolutely no surprise what price is doing. Fibonacci reversal zone identified many minutes in advance in a play in front of you. Just like Fibonacci reversal zone on S&P monthly identified years in advance. Just like reversal zone on oil identified months in advance. It's all the same. The only difference, risk management and trade hold time. Reversal zone where you expect reversal. You never enter into, you trade from. And that's the power of the method you can use on any instrument you choose to trade. No matter if it's 5-minute, 5-hour, 5-day, 5-week, 5-month, 5-year charts. No matter if it's oil, if it's S&P, if it's Apple, it's all the same. Rules are met, take a trade. Do not speculate. Oil news is next. So, what is crucial right now? This key Fibonacci resistance. And if I will bring up a couple of reminders, you would remember extremely well. This was a very big problem on bonds. Most of 2018. When bonds sold off from again, until reversal zone, where bonds skyrocketed from, where bonds struggling at again. Just like S&P does right now. Exact same problem in front of you on S&P. Very different chart, exact same Fibonacci levels, very different strategy. And this is what Apple does. Just like S&P. No surprise. Trend inception. Not the place to short into, the place to monitor for reversal. And this is exact same thing Pound does. From trend inception, no matter how horrific Brexit is, big problem, this level. Identical price action, very different risk management. And what oil will do next is a key. Identical price action on euro entire 2018. When euro been trying to rally but could not break through this level. Now euro is nasty in brutal correction for the last few months. So again, if oil respecting this key support, it's not as spectacular as trend inception reversal zone as you're witnessing in front of you on S&P. Agree? And that remains the key. So again, we expected this level to be a problem. Decision point 2, which is what we started the video from. Key Fibonacci resistance in front of you right now. Correct? It's only correction. There is no bullish rally. Just like on bonds, just like on euro. No reason to pull a trigger, no reason to buy S&P yet. Only when rules are met, you can take a trade. So let's convert this chart to 1 minute so we can see if oil crashing to reversal zone. It's a beautiful news. 53 mid-level support. Cannot short near. We would love for this support to be out, as you saw finally played out on S&P. This support been respected on oil for the last 6 hours. Mid-level support cannot short near. However, this is much better place to be. So let's convert this chart to 1 and let's see what oil will do at the time of the news. So again, S&P at trend inception at reversal zone. This is where a knowledgeable trader monitors for long. Only when rules are met, you can take a trade. Market in pain, in bullish correction. Knowledgeable trader knows that. So here we go, traders. Shock or not. Fibonacci reversal zone reminding you. Never short into reversal zone. Monitor for reversal. And rules are met, take a trade. And if oil will do the same after the news, it will be a beautiful place to be. Agree? And that's the power of pure price for entry and Fibonacci for exits. It never gets old, I promise. It only gets better. So is everyone witnessing how crucial this level is? Time and time again. There is no reason ever to pull a trigger randomly. Decision point 2 remains a problem. Knowledgeable trader knows that. So again, here's oil chart. These Fibonacci levels had been present in the trading room since early January. We are in early February. This level's applicable to any day trading chart. So, this is mid-level support, decision point 2. Right now is the time of the news. This is mid-level support. This is mid-level resistance. Once you start coming to this area, you're coming to institutional resistance, not just day trading resistance. So, for bullish trades, ideally you want to be at trend inception, not mid-level. Oil news in 1 minute. Oil news came out as expected. Absolutely nothing to rave about. Came out as expected. So here we go, traders. Knowledgeable trader allows oil to settle down for a couple of minutes. Correct? So pay attention to what plays out. So here we go. Here comes bullish rally on S&P. This is last stopping ground. Knowledgeable trader knows how crucial this moment is. Just like you remember 2717 on S&P for days. Just like 2200 on S&P weekly. Just like 54 on oil. It's all the same. Market is flawless Fibonacci puzzle. Oil in pain in the middle of the trends. Nothing to rave about. S&P becoming spectacular. But this level is the key. Knowledgeable trader knows that. Agree? And if I bring up to your attention right now weekly chart, this is a chart that's present in the trading room for years. Trend inception 2014, 2015, 2016. Not the place to short, 1800 number, the place to monitor for long. Rules are met, take a trade from 1800 to 2800. Where market sold off from. And this is what you see in front of you right now. Exact same thing. And this is exact same thing that played out on oil weekly. Time and time again. It's all the same. Rules are met, take a trade. Trend inception, flawless place to be. 26 area on oil. And where oil sold off, no surprise. 77. With 54 being major institutional resistance now. In front of you at the time of the news. And again, did we expect this pullback from oil? Of course, it's Fibonacci resistance that's been present in front of you for weeks. Remains in a play now. when it correlates with institutional resistance, it's a big problem. Oil news is expected, but this resistance not the place to buy. This is S&P from trend inception on day trading chart. How many points did S&P rally from? My goodness, and keeps rallying from 27.22 to 27.35. And that's exact same action as you saw on S&P weekly. And that's exact same action as you see in a play on oil. Agree? So, key institutional resistance 54. Decision point 2 in front of you now is a key. And that remains constant. Oil did not collapse to reversal zone. Oil respected decision point 2 to the downside. Right now, key resistance is here. And that remains constant. At ultimate trend inception, ultimate point of entry. And that's what played out on S&P, not on oil this morning. So if you would like to join us in the courses, please review the information on the website. Everything you saw throughout the video you can master in Fibonacci Mastery course in group of private mentoring. Group course 12 weeks, private mentoring 6 months. This is last month. We have any live classes and foundations. Foundations course will be videos only. So, any questions? Do not hesitate to contact me, but first review the information on website first. Listen to the students, see students' performance. And any questions, do not hesitate to contact me. info@fibinstitute.com 925-257-4298. Thank you, trader.